A dip in new listings and total inventory this holiday week tells us we're nicely back into normal seasonal patterns in the real estate market. But demand for homes stays very high, and home sellers have lots of pricing power. If you're thinking of selling your home, you have a few extra weeks of the hot summer demand this year, but you might not want to delay because this year is definitely returning to those normal seasonal influences like the school year. So your peak window is growing smaller. If you're thinking of buying in this market, you have the lowest rates since February, and you should know that there is no like magical wave of foreclosures coming to market to provide a surge in inventory. That it's just not coming. If you find a home that you like at a price you can afford, now is probably as good a time as any to buy. Each week, Altos Research tracks every home for sale in the country, all the pricing, all the changes in pricing, all the supply and demand, and present this data to you so you can see it before it becomes available through the traditional data sources and headlines. So it's now Monday, July 12th, 2021, and here is the full data for the week. Available inventory ticked down this week to 373,000 single-family homes unsold on the market. This, as I mentioned, is not unusual for the 4th of July holiday week. It is the first decline in 10 weeks and just a little downtick. Expect inventory to climb again this coming week and then peak in August or September or so this year. Remember that there is a ton of latent demand out there. People who have been trying to buy since like the peak of the frenzy in March and April this year, they're still ready to pounce at any opportunity. And since rates are actually at their lowest level since February at 2.9%, no one's like priced out suddenly. So the demand is all still there. You can see in this inventory chart that it would be normal to have over 1 million homes for sale, on the market in July, and we're only at 373,000 right now. Also notice that we are very close to the annual seasonal peak of inventory. So, it looks like we're going to peak this year right around 400,000 homes. So I've been trying to emphasize this recently, but this is why it's going to take likely years of higher interest rates to build inventory back to even normal levels. So buyer opportunity exists because money is really cheap, not because sellers are plentiful. You can also see the holiday dip in our immediate sales tracker. So these are the homes that get listed for sale. They take offers and go into contract in hours or just, a couple of days. 19% of all the new listings this week were sold immediately. About 16,500 homes. And next week, both listings and that immediate sales will tick up since we're past the holiday now. Similarly, the holiday week saw prices dip just a bit. Both the median price of single-family homes and the price of the new listings ticked down this week. The median price of single-family homes in the U.S. this week is $397,000, down from $399,000 last week. That's the red line here on this chart. Most years would expect prices to adjust down noticeably in August and September. So you can expect that a little bit this year. Last year was the exception where prices stayed elevated through the end of the year. Home prices are up 13% year over year. If you were if you're using backward looking sales measurements from like the previous months, you probably still be hearing that home prices are up 20% year over year, but it's not that steep. So 12 to 13% price climbs for the year. Still very strong, lots of equity, but down from the peak of the that end of the first quarter and early second quarter. When we look at the leading indicator of the price of new listings, that's the dotted green line here. It dropped pretty sharply over the holiday to $350,000. Again, this is definitely due to the holiday. The price of the new listings is always more volatile. So we'd expect it to rebound this coming week. Normally, you can see the price of the new listings backing off weekly in June, July, August. But this is really the first week this year that we've had any drop. So again, that's a sign of continued consumer demand, any opportunities the buyers are taking advantage of. With price reductions, this is the percent of homes on the market that have taken a price cut in the last 90 days. The normal range for price reductions is about a third of the homes. A third of the homes need to take a cut before they sell. Price reductions have been climbing, and this week they're up to 20.8% of the active market taking a price cut. It shows way higher demand than normal, but also normalizing seasonality. I've used this year over year chart here to show the annual seasonal effects and how remarkable last year and this year have been. So you can see this abrupt turn in April of last year in the green line. 2020 was so weird that demand accelerated in the second half of the year. Normally, things like the school schedule keep home buying demand to be highly seasonal. And that schedule was just missing last year. So it looks like sometime in August of this year, just before school starts, we'll see that our price reductions surpass where they were in last year. This year's cycle is going to stay far below normal. So it's higher, indicating sellers market opportunities for the seasonal future, but for the foreseeable future, but you can see the seasonality returning, the curve coming. So we'll, hit our maximum price reductions late in the year, December, before it resets in January, but it's all higher than normal, higher demand than normal. Finally, this week, we can look at days on market. Up this week to 4 weeks from the record lows of the earlier in the month. Again, totally normal for market time to be increasing, totally normal for it to be at its low until the end of June, and then tick up in July and climb through the fall and winter. It looks like it'll be October this year before days on market exceeds last year's abnormal market. And that's really how we should think about the data this year, sum up the data for the summer. Home prices have stabilized. We're past the peak of the pandemic buying frenzy. Consumer demand is not climbing from here, but it's not falling precipitously. In other words, like if you're afraid of a housing bubble, there are neither signs of a bubble accelerating nor of like a demand bubble popping. The market remains very hot with buyer demand, and normal seasonal cycles are returning. Pandemic-related mortgage delinquencies are falling because homeowners are very incentivized to stay in their homes. So that's all the data for this week. More next week, of course. Please subscribe to the YouTube channel so you don't miss the data, and visit altosresearch.com. There's a link in the description below. If you need to get this data to your clients, if you're in the real estate market and if you're in the business, that's what we do for you. So that's all for this week. As always, thank you.